Hey guys, Mike here. So obviously some good news finally, I guess you could say, and you might have noticed the markets were really green today, so we get a nice green Friday, and which is good. And a lot of high growth stocks were up double digits today. They've been just hammered down. And so, it's kind of a double-edged sword. We're going to go over to obviously the retail sales, what they mean. I think a lot of people kind of confuse it with certain things. We're going to go in that in a little more detail. And then go over obviously banking earnings have been a whole another issue. But then we're going to a group of stocks just for the heck of it and show you they are just getting hammered, right? And it's really their own doing. But this is a group of stocks where institutions were really starting to put money into and push them up and stuff. And we're going to see if they can recover or not. But I'm going to let you know why they're selling off so bad. And so starting off with the retail sales here, as you can see, they jumped 1% month over month, beating the forecast of 0.8% gain. The one thing I think is crucial to understand is retail sales aren't adjusted for inflation. Okay, as you can see, sales at gasoline stations recorded the biggest increase. Why? Because gas was really high in June. Okay, it started to drop over the month of July now, down from 5 to I think 4.30 on national average. And so you can see other ones like miscellaneous store retails, sales of non-store retailers are up, furniture stores are up, food service and drinks are up. And you can see right here starting in January, it's been nothing but a downtrend. So to finally get a little positive news means a lot to the market, as you can see. And I think the important part to take away from this and what the market's taking away from this is the consumer is still strong. Understand, we are not buying more of anything. We're buying the same, let's say it's the same amount or even less actually from what I can read and what I've listened to other retailers talk about. It's just with these expensive prices like gasoline, it makes retail sales look greater, but it's not really the truth, because I heard a grocery store, not a manager, but owner, who operates like 24 stores, 8 liquor stores or something, saying that they're actually consolidating, buying less items, but he's hitting his retail sales because the prices are so much higher, right? And we're just able to withstand it. Some people have cash, some people are running up the credit cards, right? And so the news, the market is looking for anything positive to hang its hat on, and so that would be the case. Now the other thing they're in a way hanging their hat on is what happened during bank earnings. As you can see, it's a great meme. I love this meme right here, because bank earnings were honestly not good. Like all of them were missing their expectations. As we can just scroll down here and see, you had JP Morgan missed their expectations, fell 28% after building reserves for bad loans, and they suspend their buybacks, which is never good for a bank. You got Morgan Stanley, they miss estimates. We keep scrolling down here. You have Bank of New York earnings misses estimates, and then we go over, you got Wells Fargo misses estimates, because guess what? Nobody's taking out loans, and they're big into home loans and stuff. Unity Bank Corp misses estimates. Citigroup tops profit estimates as bank benefits from rising interest rates. Shares pop 4%. They're one of the very few and in between. But what people are looking at and saying, well, this is kind of good. Actually, this is provision of loan losses, right? They're going to be holding money back, trying to make sure this is what their projection on what they think is going to be coming up here for delinquencies, right? For people's home loans, auto loans, stuff like that. And when you look at it, not bad. This goes all the way out to the end of 2022. And if you think there's going to be a recession coming up, you would think these projections will be much higher, but they are not. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. Of course, Jamie Dimon also came out after their earnings at JP Morgan and, kind of warned people about what he was seeing and, kind of scared the heck out of people, because he tends to be that way sometimes. But, everybody thought they were going to do really well during these earnings, right? Because what they tell you to do, go into banks when interest rates are going up. But guess what? When inflation's raging like it is, and home loans or housing prices, automobile prices, all this stuff, and on top of the interest rates go up, a lot of people aren't applying for those anymore. And so that dried up. Nobody's doing investment banking anymore. That dried up too. And so it's not good for the bank. So a lot of them are hitting like 52-week lows. And so, their valuations are getting really, 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 really attractive to a lot of people. And so I can guarantee you value investors are absolutely, diving head first into investing in these bank stocks. And so, we'll see, because again, we got GDP coming up here. I think it's going to be on the 27th, if I'm not mistaken. You have earnings coming up for a lot of the big companies. But I'll tell you what, you can almost tell what's happening. I said this months ago is going to happen. as soon as people started taking profit in oil, right? And understand why oil is dropping. This is important because people fear recession, they fear slowdown, and so they start taking profits out. That doesn't actually reflect what's going on in the oil industry at all. That's just the stocks people are selling out on and people trading the futures and all that stuff, right? And so what does it look like they're rolling into? Apple's one of them. It can't seem to drop to save its life. It keeps going up, actually. They're rolling into a lot of beaten down names also, but I think a lot of them are hiding out in these giant, tech companies like Google and Amazon, Microsoft, Apple as well, because they can weather pretty much. I mean, if we have a recession, I don't know how it can be more than mild, but or something like that. But if it is, that's kind of where they want to be. And so, there is a projection for oil to go back up because guess what? If it's recession fears driving it down because we fixed nothing having to do with infrastructure, we hadn't changed our energy policy in this country as far as I know. I don't think Europe's changed theirs too much to all of a sudden warn. They hadn't found a bunch of oil that I'm aware of. And so what's driving that price down is simply just people trading futures and pushing numbers around on fear of recession and slowdown. Well, all of a sudden, if GDP comes out this month, and they'll say it's positive, I think this happened over in Europe. They come up with a positive number, not a negative number, and we're not in a recession, and all of a sudden fears of recession start to subside, and that means demand is going to be there. What do you think is going to happen to energy prices again? Most likely, or even commodities in general, probably going to go up. And so that's a whole other thing. So what happens when they go up? What's going to happen to inflation again? And so you might see a seesaw effect in that. So it's going to be interesting to see. The other group of stocks I was going to talk about, because this was getting really pushed by all the firms out there saying, man, there's a bull market somewhere, and guess where it's at? In China. And it could be, but as you can see, I mean, these stocks have been absolutely beaten down today and over this past week or two. And, it's basically their own doing. I mean, you got Chinese bank customers can't give withdrawals out. They're protesting. I don't know why they're not letting them withdraw their money out. I have no idea why. But then they're saying, well, you can withdraw like $7,400 out. And understand that, this bank in particular, some of these people have like hundreds of thousands of dollars in the bank they can't get out. And so that's not going to help them. Then they're facing, mortgage boycotts in over 80 cities now, where buyers of over 230 properties in 86 cities have joined together to refuse to pay mortgage payments on unfinished pre-sold units unless construction resumes. I guess it's still not happening. Then you got Shanghai. They're adding more areas where they're doing heavy testing on this, I guess, a new strain or something that come out. And so there's all these fears of lockdowns on top of that. Then their GDP comes out, shocker, with all the lockdowns, fell off a cliff, only had 0.4% in the second quarter. And so the forecast was 1%. The retail sales did grow to 3.1%. It's amazing when people can get out and shop. But it has to do with all these lockdowns, which doesn't seem to be stopping anytime soon because they have that zero COVID policy. And it's really hard to get accurate information out of this country anyway, because I always say with their data, I'm shocked that they even allow the GDP data to be, they would actually, I guess, in a way, admit to this number. That's really surprising to me. As soon as they came up with negative numbers from here on out, they would never admit to it. But, it's hard to get accurate information, but there's just so many things going on, and it's so unstable for them. Because we know the real estate industry makes up like 70% of the country's worth, or their citizens' worth is tied up. And now you can't get your money out of the bank. You're paying for stuff that there's no construction going on to it. I mean, it's kind of a hot mess. And this is why you see China. You don't start doing QE, quantitative easing, unless something's badly wrong. And so that's why their problems are like $5 trillion over, God knows, I don't know how long the time period is. But there's a reason for that. It's not because their economy is strong, right? No government will want to come out and do that if the economy was strong, right? But then that was the real reason why people started flocking to it, right? And so they're like, oh, free money, that's going to drive the market up. And it did. Showed you those charts. But, you can just see, BABA, for example, has absolutely been just nuked so far over the last 10 days. I believe it is down almost 20%. And so every time you think you get some rhythm going with this stock, it's maybe going under 100 again. And so you don't know what you're going to get. When it comes to Chinese stocks, if they do go through their plan, if they can get people can start pulling money out of banks, get their construction industry going again, you could absolutely see a ton of money flocking into China. But I'll tell you right now, if our market starts turning around, I don't know, Chinese stocks might be in a whole lot more trouble. Because, obviously, you know, the economy's weak if we're doing QE over there or they're doing QE. And so when it comes to Chinese stocks, I mean, you know, it's always tough to tell. I don't own any of these stocks. I mean, I might swing trade here, get in and out, but you know, just there's so much uncertainty over there. Let me know in the comments if you're involved in any of these stocks or what you see, or you live in the country. Hey, you know, let us know what's going on. But you know, I find it more interesting what's happening here in this stock market because you know you got inflation obviously high. People are trying to say, oh, it's peaking, and because oil's coming out, all this stuff, and you know, it's going to be interesting. Like we'll see. You know, I got a sneaking suspicion that GDP will not be negative. I don't know how, but there's something. I don't know. I've seen what happened in the UK, seeing what's going on with China, as locked down as they were. You know, I just can see numbers being manipulated or whatever enough to make it positive and keep us out of the recession. And if that happens, and you have even decent earnings, you better watch out. Because you can tell, no matter what's coming out in the news, the market and these institutions are really trying to push this market higher. They're trying to keep it up, and you know who knows? Because I'm thinking next week, I don't think there's anything to really push it down too much. It's the week after, I believe. It's going to be the more interesting week. I mean, you'll have earnings next week, but not any of the big tech that I can think of. And so I think with Netflix, but I mean, you know, Netflix should still be a dumpster fire. I don't know, but. You know, we'll see what happens. Let me know in the comments what you think. I mean, it's a very interesting month here. It's a big month. So we'll see what's going on. Let me know if you're diving into stocks or not, just kind of waiting to see. So hope you guys have a good weekend, and I will see you later.